Good evening, active trend traders. This is Dennis Wilborn, and I just wanted to come to you on this first day of June with a little bit of an update. Something's been bugging me over the last few days. I've been chatting with a few people, and the discussion is, which is better, breakouts or bounces? Some people believe that breakouts provide the safest type of trade, and other people believe, yeah, but you leave a lot on the table if you don't take the bounce off of a level of support once a stock starts up into an upward pattern. So we've been doing some research, and I just want to share that with you briefly. Again, all materials presented here are for educational purposes only. Traders should paper trade any new method prior to the risk of personal capital. So let's get into some of the discoveries I've made over the years as being a trader. I am a bounce trader. I will trade breakouts when appropriate, but I prefer the bounce trade because it tends to get you in a little bit earlier. So as we looked at making a comparison, we asked ourselves the question, which of the two types of entries provide the best entry from the perspective of win-loss ratio, risk-reward, the objective, having an objective entries. And I want to just also share with people, I got a special announcement at the end of the presentation, so please stay with us through to the end. So which provides the best? Let's move over to the first of the offers, which is the breakout entry. And oftentimes breakouts are done, it's typically from IBD type patterns or breakout above a new high. And I was doing some research in the IBD resources, and I found out that the win-loss ratio on most breakouts is about 2/3. In other words, 2 out of every 3 trades will wind up being successful. So that gives you a win-loss ratio of about 66%. What's the risk/reward? Well, the standard is the 7 to 8% stop loss, and so from the actual entry price. Do we have an objective entry point? Yes, 10 cents above the previous pattern's high. And for those of you who've listened to some of our presentations in the past, I know that you always look forward to me drawing on the screen, so I'll do a little drawing. So 10 cents above the side. And then I just added this in also to do a proper comparison. With breakout trades, typically there is very little, if any, overhead resistance. So the concept is, as you break out into new highs, there's no overhead resistance, therefore then you can just zoom on up. Again, remembering, 66% of the time they succeed, which means 33% of the times they fail. Well, what have we found from the active trend trading system and or trend following type systems? What kind of a success ratio do they have when they take the trades off of bounces, off of either levels of support, moving averages? And here's what our research has shown us. That it has a win-loss ratio historically of 60 to 70%. And our tracking of the S&P over 10 years validated this. The risk-reward ratio, which I thought was quite interesting, is in fact lower, approximately 3 to 5%. We did a study over taking the best IBD stock at the beginning of the year off the IBD 50, and we ran for 7 years in a row to see how that one did using the active trend trading system. And the result was we had an average loss when the stop losses were hit of 3.46% over a 7-year period. Do we have an objective entry? Yes, 25 cents off of a support level. I guess the one place that it makes it different is there is overhead resistance with a bounce trade. Overhead resistance, yes. So it's not, clear sky above, but a lot of times those resistance levels are 10 to 30% away. So the question a trader has to ask themselves is, hey, if I only get, say, a 15% gain, is that okay? And we have to ask ourselves, how are we doing now with the actual breakout systems? So lastly, just some things to consider. Bit Auto, number one on the IBD 50 list this week. Bit Auto, it's setting up for a potential cup and handle pattern. We've come up and made the cup. Now we've come up close to this previous high, and now we're pulling back. So so we could call that more or less a classic cup and handle type pattern. However, earlier in its run, after it was making and showing that it was moving back up into an uptrend back here, there was entry at point 2 based on this pullback from a new high, found support at the 8-day moving average, and bounced. So on this day here, which I think was 5/19, it did a bounce and came within 25 cents of the 8-day moving average, and it provided an earlier entry of $37, so let's say $38, and continued to move up from there. Is it a guarantee that it's going to happen every time? No, but with a similar win-loss ratio, one can look forward and say, okay, 60%, 60 to 70% of the time, this will be a successful entry for a profitable trade. And the thing that I find very interesting is if one was measuring the potential of this trade all the way back to the top, here to the old previous high, and there's no resistance above that, this is about a 23% move from this entry point back up to the old high. Now we are pulling back from into a handle, and at this high it was about a 19% gain. So the question is, one can clearly wait for either a breakout type trade based on a breakout pattern, or one can learn how to trade off of these bounces. And one of the questions I'll be writing about in an upcoming article is, the question is, does it have to be one or the other? Why can't the trade and the trading system take into account both as an acceptable way to trade? So with that, I want to close out this evening. I hope you find that helpful and beneficial, and give you some food for thought. Finally, I want to just chat really quickly, encourage everybody to become an active trend trader. Every Wednesday we do a midweek webinar market sanity check, and then you can either join live or have a recording as a subscriber. And this week we will be covering trading for a living. Is it for you? And now, the special thing I wanted to say to everybody, I am so appreciative of all the people who have joined us on our YouTube channel, Market Tech Talk, that I wanted to give you a pre-launch special. We've already launched the beta testing right now on our premium service, and the premium service will go for $49.99. And it includes everything in the basic service, which is $29.99 per month, but it will also add to it pre-trade and intraday notification for income-generating trades, special alerts on TNA trades. TNA is the 3 times leverage ETF for the Russell, and special monthly webinars on the active trend trading system. And for Market Tech Talk subscribers, you can, today and tomorrow, get the pre-launch special, which will be $24.99, which is actually less than the monthly for the actual basic. And it's a money-back guarantee. If you're not satisfied with it, we will refund the month that you cancel. We will refund that whole month's subscription. And you can find it by going to Market Tech Talk, clicking here on 1/2 off premium subscription, and it'll let you sign up at our website, and then you will start tapping into all our newsletters, our alerts, our pre-market setups, and also my own private watch list of top-notch growth stocks. So with that, I invite you to come and join. It's going to only be on for today and tomorrow, and I'll be shutting down that offer at the end of business tomorrow, June 2nd. So this is Dennis Wilborn. Remember, trade wisely, trade profitably. Thanks a lot.